Looking for the sports channel, Gary.
Alrighty, we have a small red day recap to go over. There was a big, massive market sell-off today, and the SPY was gapping down huge, along with Tesla, and that was the main factor for our red day. Tesla had a huge gap down, and we had to stop out of our call spread, the buying the 470, selling the 480 call, and we were long on Tesla ever since 455, and we were 10 points in the money, but we didn't want to take profits. We wanted to target that 470 area, and sometimes if you're targeting something like that, it's just a little bit tougher to get and a little bit less probability. And so today we got the gap down thanks to the SPY, and whenever we get a gap down, I'm always just in trail mode. I don't want to just sell and cut right away because I want it to recover as much as it can. Tesla had a nice push up in the morning, got a nice bounce off this demand zone, but then once we left this demand zone, I just went ahead and went flat. It was tough to get filled on the spreads because there's so many different legs to go over and get out, but we had to cut our Tesla call debit spread right underneath 451, and that's okay because if we had not cut it, it'd be pretty much worthless right now. So always take back what you can, use that capital to fight another day. Thankfully, today wasn't too big of a red day because we were able to hedge a little bit based on the way SPY closed yesterday. It closed beneath an important level of 348. It had the chance to close above it. They chose not to. They decided to sell them into the close, and definitely overnight in the futures market, they definitely sold off SPY. So we were able to catch a put spread, and that was able to lessen the blow, and we covered that put spread first thing in the morning, so down about $107 on the day. If you remember yesterday, we're up a little bit over $500 thanks to NIO and Tesla. But I mean, a lot of the Tesla profits were given back today, and that's part of that $100 loss today. But we covered our put spread once we whipped down, and then SPY started putting in a reversal. Though, whenever you see a sharp wick like that, think that could be the low, and they're trying to punish anybody who's trying to short on a massive gap down like this. And SPY was just going crazy all day. And SPY was just up and down, massive rally in the morning. I did have another put spread that I was looking to cover at some point. And since SPY's really started chugging up, once we came back into support, I went ahead and covered the other put spread, and that was for a small little baby profit of $27. So that kind of recaps the swing trades for the day. On the day trading side of things, we just had a small little red day of minus $24, and that's because of D-Dog and Roku. So D-Dog was gapping down massively because FSLY cut their guidance or cut their forecast. If we look at FSLY is getting smacked today, minus 26%. Massive gap down, had a good rip up, but D-Dog was also gapping down as a sympathy play. And so D-Dog, what I was kind of looking at is, does this material news on FSLY really affect D-Dog that much? If not, then D-Dog might be an oversold bounce play. And D-Dog had this nice good rip up in the morning. And I was looking at it at the 109.60 level, looking to buy, but for some reason, I just didn't want to take it. I was being a little bit cautious, a little bit slow. Whenever there's a massive gap down, I like for things to really play out and settle first. But then we got this nice, good, bullish wedge pattern, and then we got a breakout right here. And right here, I went ahead and got long on D-Dog just over 111 with the stop just beneath 110. Then we formed this nice little consolidation. And then right here on this igniting candle, I decided to add to D-Dog just so I could get one contract out for a partial. And boy, was I glad I did that. We got a nice extended push up. And I went ahead and took a partial, half my profits off at about 112. And so that was for a good revenue trade of just a small $25 on the partial, but then I wanted to really hold the second piece for the bigger target of about 113.50, and my stop was still the same, just underneath 110. D-Dog put in this nice. The D-Dog actually did not do anything nice to me. It just sold off, and then eventually broke down just underneath 110. And I was like, I got to come out, even though I know it's probably selling the low because of how extended it was. You got to put a line in the sand somewhere, and that was my line in the sand. So got a nice partial out at 112. But on the second contract, since we're long at 111, this shows the annoyingness of trading options versus trading shares. Had I just traded shares, that would have been break even, taking a partial half off at 112 when you're long at 111. And then the other half I had to take off at underneath 110. And that was for a $70 loss. So that was a little bit annoying on D-Dog. So $70 loss when long from 111. but, you know, never fun. Then D-Dog started to prove itself again, and then I was like, okay, this is probably a quick spike. So then we reclaimed 110, put in a nice little bull flag, and right over here, over 110.89, I went ahead and got long, and I was keeping the same target. I wanted to target that 113.50 level. We got a nice push up for the rest of the day on D-Dog, and I was able to cover right there, just in front of 113.50 on D-Dog, and that last contract of the day was for a nice good $120 profit, so overall plus $61. Our next trade of the day was on Roku, and Roku is actually getting downgraded today. Along with the SPY gapping down, I figured I should be looking for a short trade entry. Well, I was wrong to be thinking that because Roku was an annoying expense trade today that put me red on the day, but that's okay. At least we were able to lose small and fast, and I had some decent risk in this, so I'm very happy with the way this played out. But Roku, we had this nice push up in the morning, massive pull down, spike of the high, massive pull down. This time we put in a lower high, so I'm watching it kind of on my radar. And right about here, I was looking to short Roku just underneath 225.50, targeting about the 223 area. And Roku just barely broke down, so we went ahead and got short right here on this candle once it started to break down this little bear flag. And Roku just broke down and then slowly zigzagged up. And then it started to break down again. I was like, ooh, I'm going to add to Roku. So I added again just underneath 225.25. And Roku just barely broke 225 and just wicked up. And I was like, oh boy. So what I do is I just put in hard stops in the system. And my first stop take me out over just at 226.21. And then my second stop take me out just over 226.70 right over here. And so was looking for a bigger target of 223. Definitely would have been a monstrous trade had that worked out. But Roku was for an annoying expense trade of minus $31 and minus $54 on both of those for a total of minus $85. And I'm very glad I stopped out of those because it'd be a lot worse. It'd be minus $300, $400 had I not stopped out. So a stop out that, you know, was a worth it stop out always feels like a winning trade to me. So I'm very happy with the performance of the day. Small little red day, but that's okay. We've had some monstrous green days. Not every day is going to be green, but we definitely strive for it. So what did you trade today? Let me know your thoughts on the market right now. Let me know in the comments below. Thanks for tuning in. See ya.